So gang, yeah, you could have got in at any time around here, 0.76 Fibonacci, March 20th, March 18th, 2021, 22. Goes back here again. It was went below 0.786 Fibonacci, goes to 1911. I don't know if you could have swung traded around here because it could have probably stopped you out right here, March 23rd, 2022. From March 18th, March 20th, 2022. Couldn't stop you out here because price March 22, 2022 does go to 1911. Couldn't stop you out. If you had gotten anywhere around here, March 16th, 2022, if price was heading back up above our psychological level, 1900, yeah, you could have definitely had gotten, and you could have swung trade this around 1905 all the way up to 1966. You just would have to wait. From March 16th to March 24th, 2022, and you could have rolled this all the way up and could have got about 66 pips. You know, and could have been up. From here to here. Even if we do the risk reward ratio. Even if we do the risk reward ratio, it would have got in back in when March 16th when it first opened. This is like a tremendous big risk reward ratio. But you could have got like a 8.6 risk reward ratio. You would have got in around here. And you could have around here and like around here and then rolled this all the way up to here, around here. Definitely. Uh March from March 16th, 2022 to March 24th, 2022. Yeah. It's about 66 pips, but you would have had to wait like from March 16th, 2022 to March 24th, 2022. You'd have had to wait like 4 or 5 days. And it depends what type of trader you are. Like I said, I'm more of a swing trader now, gang. So I'm like actually was expecting price to go to 0.382 and then eventually 0 and then 27 extension. I seen that happening. Definitely do see that happening. Price going to 27 extension. More long term, looking at it long term, I would have swing traded this from March 16th, 2022. I'm starting to become a swing trader. I don't know if you're an entry day trader or if you're a scraper, and you scrape for about like 10, 15 minutes. You're constantly looking on like the 15-minute chart, just trying to scrape for about 15 and 5 minutes. You're more scraping or you're an entry day trader. You're trading day by day. Price can fluctuate a lot day by day. I found out that the best strategy for me was personally to be able to swing trade. So I'm more of a swing trader now. And I'll just swing trade for a few days, depending if you have the patience and the discipline to wait, for price to, get above, a back above from, because it was here at 50 at 1950. It was here March 17th, but if you had the patience to wait of like 3 or 4 days for price to get back above 1950, it eventually breaks above 0.5, 1950, our next psychological level, and goes all the way back up to 0.382. And you could have swing traded from March 22nd, March 23rd. It breaks above this moving average, breaks above this trend line, and then eventually goes to 1965. This happened in March 22nd, 2022 to March 24th, 2022. You just had to wait 2 days. Like, some traders don't have the patience to wait 2 days. Like, the swing trade this. So it just depends what type of trader you are. Really, it's happening in like literally, really one day. You didn't really had to just wait a day. Sometimes traders can't even wait 5 hours. Let alone 10 hours. Some traders, for the move to really get back in the overall direction, you have to be patient with this market when you're in a trend, when you're in a trade, especially if you're swing trading this, gotta be patient because it's not just going to go back up 50 pips, right? Sometimes it can happen, but most likely probably will go down, go back up again, go down again, then go back up, creating this double bottom, this W formation. So just look at it, on a 4 hour. you could see this on a 4 hour. So you know, you have to be very, very patient with this market, and really wait and see what this market is doing. This didn't happen until London session, March 23rd, 2022, when we seen price, make this bullish engulfing pattern, this bullish, bullish pattern, bullish candlestick, yellow candlestick, making a let us and breaking above this moving average, let us know that okay, price is going back up. When you see candlesticks break above this moving average on a daily or the 4 hour, we're going back up, and it'll go from 0.618 Fibonacci to 0.5, 0.382 to 0, and then eventually 27 extension. So it does break above, our 1950 psychological level, and you see what price makes a higher low before making what a higher high, back up to 1960s, 1966, 1965. And you could have gotten for an entry around here. You could have got in for an entry around here. Boom. Once soon you see price break above this moving average, bring your stop loss a little bit up more closer, and you could have got a 3.65 risk reward ratio, and you could have rolled it from 1928, 1930 all the way up to 1965, 1965, from 1920, 25, about like 40, 35 pips, now price should head up to what, zero, eventually zero, and then 27 extension, you know. So depending what type of trader you are, gang. Like I said, gang, I'm more of a swing trader now. And I don't mind waiting, 4 or 5 days, 3 days, 2 days sometimes. This happened in 2 days, March 23rd, one day, March 23rd, 2022 to March 24th, 2022. It depends what type of trader you are and what you're trying to do. Some traders are just trying to scrape for 10, 15 minutes in and out of trades. Some traders are just trading every day, intraday trading, or swing traders. Sometimes I'm an intraday trader as well, and it's what I would do, again, you would scale down to the 2 hour. You would just scale down to the 2 hour. You can scale down to the 2 hour. You want to see more structure, just got down to the 2 hours, see consolidation on the 2 hour, price making higher highs and higher lows and higher highs. You can see more structure once you start scaling down. You'll just keep scaling down. You can see more structure when you scale down. You can see price with this moving sideways. This is called like a sideways. This is all consolidation, even right here. This is like consolidating right here as well. Like, again, it's all consolidating right here. Boom. This is considered like consolidation right here as well. Price is moving sideways after going up 50 pips, March 17th, 2022, from March 16th, 2022. This happened in one day too, This happened in one day, March 23rd, 2022, March 24th, 2022. We see price, hit back up. We zoom in on the 1 hour. We see more structure, but really just going sideways. But you see price did break above this yellow. You see yellow candlestick breaking above the moving average, breaking out of consolidation, breaking out of the box. When you see price break out of this box, you can enter. Then price gets above this blue line. When price gets above this blue line, this moving average line, this lets us know we see yellow candlesticks. Yellow meaning we're going up. Yellow candlesticks mean we're going up. And this lets us know that buyers are in complete control, and it goes all the way up to 1965. You could scale it into the 1 hour. And obviously the 15. We got the 15 on here as well, gang. Obviously you see the 15 on here as well. Boom. Price is just making structure. You could have got in for entry. Look on the 15 to get in for entries as well. To find better entries, you go to the 15, to find some good entries where we want to get in at. But yeah, gang, this is what we do, gang. This is how we will do. Scale in. Make sure you scale in. Go back to the 4 hour. You look on the overall direction of the trend. Boom, on the 4 hour. In the daily. Okay, gang, in the daily will tell you. You see the 4 hour. You see candlestick pushing above this moving average line on the 4 hour in the daily. It'll let you know that we're in an uptrend. Making this W formation. You know, we finally seen on the daily this bullish engulfing pattern push above